intentional here.
Yeah.
Considering
Inventory.
Vic Bell, there he is, real estate fund manager. I mean, if you've been anywhere online, LinkedIn, Facebook, or just Google the name, you'll see Victor. So Victor's all over the place. A great guy, Victor Bell there. Glad to have you on the show today. And if you don't mind, can you tackle that first thing we just talked about? And I gave a quote. I don't know if you was going to say that or not, but it resonated with me so much. I always use it. Why invest in multifamily? Like, what do you think?
That's a that's a huge thing because, first I like to do the distinction because, anybody listening to the show, you're going to fall into kind of two buckets. You're going to either be buying a property for yourself or you're going to be investing money with somebody else, whether you're a syndicator or fund manager or something like that. You're going to be investing money with someone else. So there's two reasons that, even though the reasons for using multifamily as a vehicle is the same, your goals may be different, right? So for me, why invest in multifamily? For us as a fund manager, allocating my investors' capital and stuff like that for our company, number one is capital preservation. It's like the goal of all investments is not to lose money. And to me, of all the real estate, single family, hospitality, warehouse stuff, retail, office, everything.
Right.
Multifamily assets is probably the number one because basically people will always need a place to live. So capital preservation, don't lose money. Number two, cash flow. Number three, future appreciation, and then the tax benefits. So for me, when I'm thinking about an investment, when I'm talking about taking money from a bank, cash account, stocks, bonds, whatever, retirement accounts, if you're going to move money into a real asset and it's going to be real estate, it's probably going to be multifamily, one way, shape, or form. So that's very important to me as I'm looking. There's a lot more. Like I said, depending on people's goals for buying the property itself. And it's the same as a buyer as it relates to investing your money there. But that's why I look at it.
Gotcha.
100%.
Yeah, no, it makes sense. I gave a simple answer, but that resonated with me so much. The whole roof analogy. I just like it. You've heard me say that so many times, right? And for somebody else that's watching, I'm glad you touched on the different types of multifamily because sometimes I get that a lot, right? And being a lender, oftentimes people will come to me and they'll be like, "Hey, man, I'm thinking about getting a quadplex," right? And they look at it from a loan perspective, right? So from a loan perspective, we can go 1 to 4 units. That's still considered residential. It's considered residential. It doesn't get into the multifamily until 5 and up. And I was talking to someone the other day, and what made me think about it is he was like, "Well, I'm thinking multifamily too, but I'm thinking student dorms and different things like that." And it dawned on me, like, sometimes we have to distinguish the different types of multifamily, whether it's high rise, mid, garden, and different things like that. Vic, you've been a fund manager, right? In the multifamily space. Can you just tell us just a little bit about that and multifamily? Like, what's the benefits of, instead of me trying to go out and get a multifamily myself, but maybe I would invest with someone like you with a fund who, that's the main thing that you do, is you tackle the multifamily space.
Yes, sir. Yeah, absolutely. So the difference of it with, again, it's there's levels, right? Like, so and multifamily is a vehicle. It's, this is naturally they're considered alternative assets, right? Because you can invest in stocks, bonds, retirement, gold, silver, crypto, blah, blah, blah. So, but to your point, if you are going to invest with someone, number one, if you're investing in a fund, we are a long-term investment. If you're investing in a syndicator, typically syndicators are in the deal for maybe 3-5 years, somewhere like that. And then they're going to either put in new financing or they're going to sell the property. So it's a little shorter. We're 7 to 10 years on the hold, even if we recapitalize by refinancing and paying our investors or keeping them in. So when we talk about stuff like, for example, the ADU play, if you're looking at investing with somebody, that's their business plan. If you're looking for, similar to like the deal, that we're kind of using as a case study today, that was a deal that somebody got. They converted and added on a few more units, and it's called highest and best use. And then they brought that up. So naturally, if you're an investor in that deal, short term, you're going to put your money in that deal. They're going to do what they do to it to raise the value, and then they're going to sell, which is what they're doing, or they're going to refinance, pull their money out, and do something long. So investing with a syndicator or fund manager, that needs to be their business plan. All right. But that being said, worst case scenario, if you want, we can spill right into that. So people can kind of get a visual. It's always good for people to see stuff, because if you're going to invest your money, whether you're doing it yourself or with somebody else, the business plan matters, the real estate deal matters, and naturally, like, the person executing the business plan matters too, to your point.
The opportunity of the week. So it's a local opportunity of the week. It's out in Point Loma, and this deal right here, 2053 Chatsworth Boulevard, excuse me, is actually currently on the market. Right. So let's dive into that. This is like the property that I spoke about earlier, right? Where they actually went in and they added 4 ADUs to this property just this last year. And they added the ADUs to this property this last year. The property is actually currently on the market. So it's a 9-unit multifamily property. It's currently on the market at 3.5, I believe.
Yeah, 3.5. That's what it looked like when I saw
Yeah,
it too.
yeah, three and a half. There it is. Okay, there it is. Offering price. There it is. 97% occupied. And there's the current NOI. Right. So, what are your thoughts on it? I know you took a look at this property. What are your thoughts on it, Victor? Like, is this something that it may not fit into your box, but what do you think about it?
As an investor, I mean, for me, like, I have a couple of different things, what's called a buy box for a fund manager or syndicator, like when we're going off to look at deals. So that way we don't kind of get like, scatterbrained looking at every deal across the world. But it doesn't fit into our buy box as it relates to raising money and bringing it to a deal. But is it a great deal for somebody? Absolutely. I mean, every deal, right? There's a saying we always say, like, there's an ass for every seat. So this deal has to be, a seat, and some ass is going to fit into it for that purpose.
Right.
I think, because I drove the property, just because I look at all properties, and naturally, like, and this is good for people to understand when you're dealing with someone like myself, who's a fund manager or manages a fund in other people's capital. So the scenario about this is that I drive properties. If they're in my market, I want to know what's selling, what's trading. Sometimes it's in my buy box, sometimes it's not, because I'm looking for specific things about locations. So for this deal, location is great. I mean, it's not a Point Loma thing, because there's locations inside of locations, because there's parts of Point Loma I don't like.
Right.
But then there's a part where you turn the corner and you go, wow, this is nice. And that actually is there. So, anybody looking for a deal like this, because this deal is kind of more probably going to be seen as more of a stabilized deal. This will be more of a turnkey opportunity for somebody, in my thoughts. That it's already been done. And, for the most part, there's an asking price. There's a price per door. For the age of the property, that's kind of what it is as it relates to. And I'm sure Adib could speak to this. There's a age built, and then there's a renovated age on that property, right? So like it's been functionally renovated, is what I'll say, rather than kind of use the big fancy words of what that is. So there's a physical age and there's an economic age, to go from there.
Right.
With this thing being renovated within the last year, economic age wise, it looks to be decently new as it relates to, it looks like they did the windows. They might have done the roofs. They might have done all that, as well as they've added an additional 4 dwellings to this place. So they've pushed it up to highest and best use as it relates to somebody taking a look at it. Just from a sheer real estate scenario, it's highest and best. Its economic age has already been brought up to par, even though the physical age is a little bit older. The location is sick. All the properties around it, all the properties around it probably range in that maybe $700 all the way up to $1 million range, and probably past there if you push maybe about 5 miles out, or somewhere in between 2 to 5 miles out. That's the question. It's right down the street from a high school. So when I'm looking at those things, that's all I care about first. Before I look at numbers, before I look at purchase prices, do we even want this as an asset to park my money in? Because you're taking your money out of the bank and putting it into some other place. And like we said, if number one is preserve capital, will this building itself preserve that capital? Could it be destroyed? Could the neighbors tear it down? And it's a great spot for somebody looking for it.
It makes sense. So I often talk to, and I see a lot of investors. And one thing that I picked up over the last year is I was speaking to one investor in particular who does he does a little bit of both. So he does single family and he also does multifamily. Again, I'm really getting more into the multifamily based off of what I said earlier. So when you say you can't go wrong, and and with the cost and different things, one thing he said that also resonated with me. He said when he's out and he's looking, and Vic, you may attest to this. He said when he's out and he's looking, he's not looking at uh, how did he say it? Low or high price, or cheap or inexpensive. What he's looking at is if he's going to have a low return on investment or a high return on investment. And kind of like what Vic talked about earlier, once you have this investment strategy and you have your certain buy box, I think that's where everything falls into place. So like if you look at this and that cap rate at being 5.3 right there. If it's in your box, then I think uh, this is what you start to look at and how you start to go about it. So you look at the
Right.
cap rates for the area, right? And then you start looking at the location, which Vic touched on earlier. I made a joke earlier when we was talking about Point Loma for this particular property. When I first got here many years ago, I talked about Point Loma. I was told when I first ever came to San Diego that Point Loma was actually the beginning of California. I don't know if you guys ever heard that or not before, but I actually heard that. Like this is where California starts, because it's like its own little peninsula out by itself. So, and I bring that up just to bring up the location. When you say the
Right.
location and being beautiful, and actually having a university there,
Right.
so it's great. So I think when you look at those things, and then you don't worry about whether it's cheap or
Yeah.
expensive or whatever, you're looking at the return on your investment. Me looking at it, I think it would be a great investment. Getting new into multifamily, everything checks off. If I'm going to be lending on a property like this,
Hmm.
those boxes are checked. This particular property also, not only could you um, get a loan or something like that from a person like myself, but I believe assuming the current loan is also an option on this particular one, which is it's at a fixed rate for the next 3 years. Not to get too much in that because we really want to focus and look on the property itself. Vic, what's your take on the current state overall for multifamily? What are you thinking?
This will be a clip. You guys can clip this later. In 10 years, you will wish you had bought everything you could have got your hands on.
There you go.
I promise.
Because we're
Because
Right.
wishing that right now, Victor.
yeah, like so a lot of these deals, now I'm not saying they pencil. I'm just saying that if something pencils, even if it's like there, I'm not saying to go risk and lose. I'm talking about calculated watching. And this is a market insight. With everything going on in the market right now, with the Feds pushing to raise rates, not raise rates, if they, like a lot of people are sitting on the sidelines. As things begin to move, when you're thinking about yesterday's pricing, which is what you were talking about. But this is an investment. You're not buying a shirt or bicycle, you're buying an investment. So if that deal cash flows and you can hold it and you collect assets over the next 10 years, because this is what the market, this is the market correction that we saw years ago.
Mhm.
This is also similar to what happened in COVID. This is 2008. Just we're all living it at the same time, so it doesn't seem so detrimental. But I promise you, you're going to look back on your life and you're going to be like, man, I wish I would have got my hands on every piece of multifamily real estate that fit into my box in San Diego County 100%. And if you don't do it, I promise you, you'll look back and you're like, shit, I screwed up. Sorry about the language. So,
Yeah, no worries.
so as it relates to the market is concerned, that's my insights. Pay attention to the market, buy the right asset. Every asset's good if you can hold it, but make
Right.
sure that you move forward with that because the market is starting to move again and things are coming available.
Multifamily is like when Vic was just saying, and 10 years from now, you're going to wish you invested in every single thing that you can get your hands on when it comes to multifamily. I've heard investors say, listen, man, look, search, strategize, get your buy box, right? One multifamily deal can change a lot of lives for your family, right? So
Mhm.
I'm sure you've seen that, Vic. I know.
Yeah.
Like I said earlier, I know Vic. He's been teaching me a lot about this whole multifamily. So he's like my mentor. So like done like 60-something million or something like that in multifamily. But
Mhm.
I've heard it, I've seen it. I talk to people. And people have that as a strategy. Look, man, I just need to look. I need to find that one deal. You know, the good thing about you having a fund and everything is, hey, if you got the money, all you have to do is just dump it into his fund and then kind of like sit back and collect, right?
Right.
Which would be ideal.
Yeah.
And that's what we would want. So, hey, thank you guys
Mhm.
a lot for being here today. It was great to have you on. It was a
Cool.
lot that was learned
Mhm.
here today, and I myself still I'm learning again. You know, I'm happy and thankful that I was um, be able to be the host today. If any investor out there is watching and you're looking to get into the multifamily space, make sure look at the numbers, make sure the numbers match based on your investment strategy. Go and drive it like Victor does and figure it out. Victor, closing remarks.
Yeah, definitely. You know what? Invest in multifamily, period. Like at some point, if you don't know and you learn this business, educate yourself on it. But the easiest way to become an investor is to invest. That's how you do it. Reach out to myself. You can go to bell-capital.com. We are having an investor event coming up next week on the 21st at our offices. You got to be accredited. You got to be liquid. You got to be serious. So it's a little bit different, but you can go to bell-capital.com/RSVP, and one of us will reach out to you, add you to the list. This is just for people who are interested in investing money, and you can see what we do, why we do it. But it's important for you to get around people. Your network is really your net worth, and real estate is a contact business. You can't do it from a Zoom. You got to get out there in the market and play this game, but it will take care of you and your family for generations. I promise you, if you invest.
LearningLocal.com. You can be on here. You can be one of the professionals. You can sit in this seat where I'm sitting. You could host, and it's all things real estate. I'm not sure when the next show is going to be coming up, but it won't just be multifamily. You know, I was excited about the multifamily again because I'm still learning that. So we'll be doing single family. You know, we'll be doing wholesaling. We may even have shows about land. So if this is your expertise and you're in that field and you're a professional, please learninglocal.com. Come through. Join the show, join the conversation, bring your expertise, and we would all love to have you here. Hey, you guys, thank you very, very much, and have a great day.